Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 14th of August. I'm Brian Fernandez, and let's start by taking a look at market action across the region. Now, we're going to start with overnight in the US. US stocks rallied and moved closer to last month's record levels following the PPI report. The Dow Jones Industrial Average climbed 1.04% at 39,765, and the tech-heavy Nasdaq Composite jumped 2.43%. Now, the S&P 500 added 1.68%, coming to roughly less than 5% from its record high set in July. Now, over in Asia, Asia-Pacific markets have extended the gains this morning after producer prices in the US came in lower than expected for July. Now, the producer price index, which is a measure of a wholesale inflation, increased 0.1% last month. Economists expected the reading to show a monthly gain of 0.2% in July, which was in line with the previous month's reading. Now, this is according to Dow Jones consensus estimates. Now, investors will now shift their attention to July's consumer price index figures from the US due out tonight in Asian time. Now, over in South Korea, the country's seasonally adjusted unemployment rate sank to 2.5% from 2.8% in July, hitting the lowest point since October 2023. Now, in Japan, business sentiment and manufacturers turned slightly less confident in August compared to a month before, according to Reuters' Tankan survey. The Tankan survey, which tracks the Bank of Japan's quarterly survey of the same name, showed that the sentiment index for manufacturers slipped to plus 10% in August, while the non-manufacturers index fell to plus 24%. Both metrics stood at plus 11 and plus 26 in July's survey. Now, this is due to lackluster demand from China, which weighed in on corporate sentiment, according to Reuters, which also reported that the survey comes after the Bank of Japan raised its benchmark rates in July to their highest levels since 2008. Now, that's it for today's market updates. Now, to give us further insights, we have our guest today, Phan Vee Leung. He's the founder and CIO of Track Record Trading Academy. V, welcome to the show.
Hey, Brian, it's good to be here. Let's talk about markets.
Now, talking about markets, first thing is the overnight US stocks rallied, moved closer to last month's record levels following the PPI report. Why was there, first of all, such an optimistic reaction to the PPI report?
Well, I think it's a clear sign, yet another signal that another sign that inflation is now not the enemy that the Fed should be focusing on. And we are seeing more confirmation that inflation is falling faster than expected, and it's heading swiftly towards their target, decisively towards their target. And we are hearing that from various Fed speakers as well, that they are getting more confidence that they will cut interest rates before the end of the year. And it's also a reflection of market positioning. I think last week, if anybody still remembers, there was a harrowing sell-off at the start of the week. It looked like it was yet another crisis brewing. Maybe some financial institutions will fail because of this unexpected big moves in the market. VIX, a measure of US market volatility, jumped from low 23s to 65, which is the highest we've seen since the start of the COVID crisis. But since then, the VIX, the measure of volatility, now is very close to recent lows as well, around 20. And it is a sign that this jump in volatility is a sign that many speculators as well as investors were buying options to hedge the downside because they were worried that Iran will retaliate, that the Bank of Japan will have to cave and not continue hiking rates, the unwinding of yen trades and all. And we saw big liquidations And since then, the market has gone steadily up, recovering every day. And with this, yet another sign that the global macro picture remains intact, which is that inflation is falling, the major economies remain strong but slowing and not really going to cause a spike in inflation. So risk assets will do well and continues to do well, and it's likely to continue to do well going forward as well.
Okay, so risk assets, that's a key takeaway. Risk assets will continue to do well. One thing that perhaps many investors don't keep in mind is the impact of the carry trades. I think that worried markets. Is that still an overhang given what the Bank of Japan has said?
Okay, so what the Bank of Japan has said is that they will not continue to hike interest rates if the markets are unstable. And by unstable, I guess they mean a drop of more than 10% in the Nikkei stock index, or
Yes.
something close to that. That's a reassurance that they are not blindly going to continue hiking interest rates if the market cannot take this kind of drastic moves. That I think that is kind of like postponing the end game anyway. But the unwinding of the carry trade is healthy. It is the right thing to do going forward because interest rates in the US will drop. The interest rates in Japan is likely to continue going higher. But the move last week has caused many of the short-term liquidations, the weaker hands. And it's not going to be a surprise going forward that you have to unwind your carry trades, but you can do it in an orderly fashion. You don't have to panic and unwind everything in one go. But how does
Are
it
we seeing
affect?
that happening already? Because that would have obviously spooked a lot of traders. Is that accelerated unwinding of the carry trade starting to happen already? Are you seeing that in markets?
Well, I think it continues to happen. It continues to happen. This trade has been going on for years, right? It's not going to be unwound on one Monday.
Yes.
It's going to take some time to unwind. These carry trades are not done just by speculators and traders, but they are also done by in real money investors, meaning that they are likely to have taken loans in Japan to invest in real estate somewhere or invest in bonds somewhere else in the world. So that's not going to be unwound in a single day. It's going to take time to unwind, but it's not going to happen in a disorderly fashion now because markets are quite stable. But the conditions that we are seeing, which is like benign inflation, is always good for global markets. And benign inflation in the biggest economy in the world will always be good for risk taking in general.
Now, finally, investors are now looking to the CPI report due later today, Asian time. What are the expectations for this? And could a worse than expected number perhaps cause investors to take some money off the table?
Oh, worse than expected? You mean a higher than expected inflation print? Yeah, that's going to
Yes.
be bad for risk sentiment because it reverses what we saw yesterday as well. I think there's some new trades being put on, hoping to see the continuation of this trend. Yes, I think on the horizon on the markets data calendar, a bad print would be that inflation is higher than expected. The other thing that we do not want to see is a much weaker than expected economy, especially in terms of job growth or economic growth, right? We want to see moderation in the economic performance. So growth, but still slowing moderately, and inflation moderating towards the Fed's target or the central bank's target. As an aside, in another sign that inflation is moderating all across the world, except for Japan, I guess, is that the Reserve Bank of Australia, the Reserve Bank of New Zealand just cut interest rates by 25 basis points this morning. And that's a sign, right? The RBNZ has always been very good at conducting policy in an orderly fashion, and they have resisted cutting interest rates for more than a year now. And the first cut in the cycle is always it always turns out to be too late in the game, and they always the central bankers tend to end up doing more and faster than expected. So I think it's a good sign. I think we are likely to see more major central banks following in this path of cutting interest rates, and we're likely to see lower interest rates in the weeks ahead in the major economies.
Now, Vee, on that note, thank you very much for your insights. Thanks for coming on the show. We've been speaking to Phan Vee Leung. He's the founder and CIO of Track Record Trading Academy. This has been BizTech's Asian Midday Market Watch. Be sure to keep informed on latest market developments weekdays at 1 p.m. I'm Brian Fernandez. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.